If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's June 9th, 2020. And today is Tuesday morning. So looking at the highlights of the day, the Dow Jones continues to push higher, with the NASDAQ making all-time new record highs in light of the fact that we're in the midst of a pandemic. Unbelievable events that are happening. But let's take a look at the separate sectors. So there's no economic event scheduled for today, but remember, tomorrow we have FOMC, which is an interest rate decision from the federal government tomorrow out of the United States, a very important number. And then Friday we have consumer confidence number coming out. Now looking at the general markets, we're watching the currencies take a little bit of a break at resistance. The majors taking a break, including the euro, the GBP, also the Canadian dollar. We'll take a look at that in just a second. Looking at the Dow Jones making new all-time highs for the NASDAQ. Unbelievable for the indices. We're going to take a look at the individual stocks that are pushing higher. And looking at the commodities, gold wavers, okay? When the indices go up, gold kind of takes a break, okay? Trading below 1700, while oil trades down at $38 a barrel. Lastly, looking at the stocks, it's Apple Computer that leads the way. We mentioned it yesterday. It was trading very close to its all-time highs. Yesterday it made all-time highs and then possibly continuing later today. But let's take a look at the markets and see what we can expect from today's trading. So we're first starting out here at a weekly chart of the Euro USD, and you can see pretty much we've hit this battleground at 113-ish level, and we are taking a little bit of a break from there. Now you got to look across the board, okay? Not just the euro versus the dollar, but everything else against the dollar as well. And we're taking a little bit of a break here. Now this is not a massive break, right? It's about 40 pips, 35 pips that we're taking a little bit of a break here, but nonetheless it is happening. I mean, within the intraday of yesterday, we were trading really in a very tight range. Look at that, between 113.12 and 112.80-ish level, which is 25 pips, 20 pips, you know, so not really a big deal to be trading within this range after we've taken such a nice big rally. Now looking at the GBP USD, we took a little bit of a break there, 127.56 after hitting that high, which is previous resistance, previous support, right? This area was previous support, subsequent resistance at this 127.56-ish level, as you can see perfectly there. Now looking at some of the other currencies, USD CAD also takes a little bit of a break from its strengthening versus the USD as it's posing right here. Now this is all on the back of the commodities, okay? The commodities are getting weaker. If we look at gold, it's trading further down at 16.95, not pushing us higher above 17. So this may find itself in a lower trading range between 117 and 1673 on this lower trading range between 1741. So just keep that in the back burner as the Dow Jones continues to plow higher. As I'm shaking my head, I don't understand it. You know, we're in a pandemic. We're hitting somewhat of a recession for sure. Okay, but the markets are very resilient. Now, in the back of my head, I'm always reminding myself, Donald Trump is always about making America, quote unquote, great again, whatever that means. And one of the biggest things on his agenda is the economy. So he's not going to let the economy falter on his watch. And that's exactly what's happening, okay? Right now, we're looking at the price of oil trading at $38.39 right now after taking a little bit of a breather from the $14.50. Now, OPEC wants to cut some of its production in order to save some of the price of oil going further down as the easing of the lockdowns are still happening. And this is going to be a little bit of a yo-yo, in my humble opinion, okay? I think the economies are going to open up, and they're going to go back to closing down. They're going to open up again, then they're going to go back to closing down until there's somewhat of a vaccine, or until this virus continues or makes its way through or is completely dies out from society. Because in certain countries, we have seen a little bit of an advancement in terms of controlling the virus, like New Zealand, but in other countries, it's running rampant, like Brazil. So, you know, as long as the countries are left isolated, perhaps we could, you know, stop it from spreading. But nevertheless, you know, that's going to have effects on the markets, obviously. Okay, so with that said, we're looking at the price of oil trading at $38.39 with a possibility right here of just trading within this range between $38.10 I would say, and somewhere at that 40 level until we have a clearer direction which way the markets are going. Now, looking at the Dow Jones, we did not stop yesterday. We went from 27,100-ish level to 27,500-ish level as we are trading right now. Now, we plowed through some resistance area at 27,179, and we're trading higher. Okay, this is really unprecedented. Okay, we're trading higher at this 27,540. Now, your next real resistance level is 27,000 or 28,000, I would say, at this area. Okay, so something to consider as this is trading up into this area. Okay, so, you know, as we get closer to this 27,800, 900-ish level, I would be looking to unload and possibly, you know, going a little bit short in the anticipation that it's going to correct itself somewhat. Okay, however, the stocks are still very strong, and the thing that's carrying us higher is the NASDAQ. NASDAQ making all-time new highs at 98, 94 right now, closing in at that 10,000 level. Just to give you a perspective, okay, if we could go that far back, we can't, okay, but in 2002, 2005, we were trading somewhere at 4,000-ish level. So this has really been a tremendous rally for the NASDAQ since 2016 of when, you know, even earlier than that. Let's take it back to 2008, okay, where we traded as low as 1,100, okay? So an amazing rally for the NASDAQ. Now, this is obviously carried by the tech stocks, okay, namely Apple. Apple hitting all-time new highs at 332, but I would be a little cautious of buying here, okay? This is where it becomes a little bit scary, where you're carrying it higher and higher record highs, but you're not so sure how much further it can go. So the FANG stocks are still strong. If we look at Amazon not making new highs, okay, Microsoft not making new highs, okay, Facebook not making new highs, and Google not making new highs. So I would say that there's going to be a correction. The question is when it's going to happen. Now, when we look at the traditional stocks, they're grudgingly going higher. Okay, when we look at the JP Morgans, yeah, did it trade up to 113, 115-ish level? Yes. But is it down on the day? Also yes. Okay, it's not showing green candles and showing me some sort of a correctional move here. Okay, so something to consider with this, you know, alternative rotation that is happening in the markets, and also that we have FOMC tomorrow. So this may be just a little bit of a prop up until they come up with the interest rate decisions moving forward. This is Fred Razak. I want to wish you guys a great trading day. Thank you.